Hey guys, how are you? Good morning. Hope you're doing well. So let's go over some trades. Very fun morning overall trading. I made a few mistakes and I had some really good scalp trades. And I'm going to go over with you what happened, what I was looking at, and all of these trades that I took. So I'm going to show you a bunch of charts. So I watched these four mainly, which are the S&Ps, the NASDAQ, the healthcare, and the financial sector. So those are my guides during the day. And generally, I'm trading the S&Ps, right? So this morning I was looking at how we were opening, pretty much near the same opening price as 2 days ago, and again below the high of 2 days ago and the high of yesterday on the S&Ps and on the NASDAQ. Taking a look at where we opened, definitely the highs of yesterday on the NASDAQ were a level that I was watching, okay? The highs of yesterday on the S&Ps as well, and that euphoria top on the futures chart, which is at 2980.9, and obviously the highs of yesterday and the highs of 2 days ago, like I was just telling you, okay? So we're watching those levels, and that's it. So generally, the levels on the Qs was 231.76 that I was looking at, and we popped originally, and I was watching how we were going to close above that level. Okay, I started off this morning and I actually got faked out pretty bad on some puts first thing. Okay, so when we had the open here, I'm going to get you in here on the 1 minute chart. So take a look here. This was the open. We're sort of in a trend. This was the high of 2 days ago, and we started the morning relatively bearish. So right there, that was the fake out. It got me in some puts right there, and I had to get out as soon as we broke these highs. But I stayed in way too long, but I gave myself more room in the trade. So I added a little more as we popped up higher. But really, I should have just taken the opposite end of that trade and just hedged myself. But I just stayed in those puts a little too long. So I'll show you my trade log. You're going to see a lot of trades here. But just look, I picked up these puts first thing at 933. And then I bought another one at 936. And generally, what was keeping me confident was I was watching the tape and the price action on the NASDAQ and how it was reacting around yesterday's highs, okay? So you're going to see NASDAQ around yesterday's highs. You can see that we pushed it first, and then we closed above it on the 5 minute chart at 232. But then I wanted to see it stay above 232. Because if you look at the extended hours, 232 was pretty much the extended hours resistance. And I wanted to see a close above 232 for more than a 5 minute candle. And because it got sold into right here, that kept me relatively confident to stay in these puts, okay? And yes, obviously from a short-term basis, I should have dumped those puts much quicker. But I basically was more patient in the sense that I waited a little longer to see how the NASDAQ was going to react around these highs, okay? So let's get back to it here. So I added a bit more on that high, and then I said, okay, if S&P start pushing above 298, I'm going to get out, absolutely, of course. And if the S&Ps push above that, the NASDAQ's definitely going to be closing above the level I was just talking about. And we started to fade from these highs relatively quickly, got into a little bit of a sell, and then I was just watching how the price action was reacting. We came down in a pretty aggressive sell here, and we held these lows, 296.75. Again, that's the high of 2 days ago. We held it pretty well. And then we came up for another sell and another one here come up for a lower high. And the S&Ps was very generally choppy. So I'm going to compare with you the price action between the S&Ps and the NASDAQ. Looking at the NASDAQ again, this 231 area I was watching. So after we had sold off, I was watching the selling pressure coming in. And I knew that since we rejected that high, it was going to be a higher probability that we were going to now come down and test this 231 area, okay? A lot of big tech sector names were selling off today from their highs, Amazon being one of the weaker names. And I think that's the reason why the NASDAQ was getting a little bit of a sell-off today. Those big tech sector names, again, it's 4 names pretty much. And if they start selling off, the market's toast. We came up for a lower high here, and you can see how much weaker the NASDAQ was versus the S&P. This was the S&P at that moment, and this was the NASDAQ. As of 10 o'clock, the NASDAQ was making a lower low, and as of 10 o'clock, S&Ps were making a higher low. Okay, so the S&Ps were a bit stronger. We came down to test these supports, and then we came up for a lower high, and I was watching how the S&Ps were reacting here. And again, it was all about the healthcare sector and the financial sector. So we'll just take a look. This was another signal, watching XLF coming up to test its high of yesterday. Right here, 22.20, 22.21. You can see how we rejected it once, and we rejected it twice. Once I saw this pulling back here after a second time rejection of the high of yesterday, that increased the probability that we were going to see at least some sort of a pullback, okay? Looking at XLV, same sort of idea. We had a bullish trend change to the bulls, and then we came up right to the low of yesterday, and then couldn't push above this 99.92 area. The high was 93, and we resulted in a nice correlated pullback with the market there. So a lot of these names are at resistance at once. They did a very good job of making it look somewhat bullish here, changing the trend. But then when these things topped out, that was an opportunity for the bears to jump on that, and then that kind of set the tone for the rest of the day. The bulls in the morning got trapped, and that was it. We got a bit of a bear trend day, okay? So the Qs were the weakest out of all the sectors. If you look at the financial, you can see that we came up for a higher low, and then we finally managed to roll over. So let's take a look at the S&Ps. Now I'll show you my trades to start. So again, I got long the puts here, and I stayed in the puts for a while, okay? And I was waiting for these things to see if they would ever roll over. Once the Nasdaq started rolling over below 231, the S&Ps also started rolling over. XLF was trying to push under 22. Again, it's been meandering around that 22 level for the last week and a half now, probably. And I took profit on these puts here. So I sold the contract there, sold the contract there, and I pretty much got out right there on the last contract. So I would have got out of all 3 contracts I had during all of this. Then I watched pretty much how we were reacting. This right here was a very quick put scalp, and I'll show you that real quick on my thing. So right here at 1044 and 1045. So I picked up some puts at 71, right at the test of the moving average, and I immediately put in a sell limit to sell them. So that was a quick scalp. So I basically got in these puts right here as soon as we were coming up to the moving average, and then I immediately sold them on this little dump right here. So that's an example of a perfect scalp, and it would have been nicer on the 1 minute chart and then the 2 minute chart. Good thing I got out there. So that was just going to be a scalp. That's all I was looking for, in fact, was just some sort of mini pullback down to this sort of support level, 295.58. Okay, so then this is where it gets a little messed up. So I'm watching this consolidation on the markets here, and it's possible, since how much we sold off, it's possible that the low of the day is already going to be in here. But again, I'm skeptical of the bulls because the Nasdaq is still showing signs of weakness. So I managed to impulsively get long some calls, and I got long at the worst possible place ever, okay? And it was right here. Boom. I don't know why I got long calls there, but I did. Anyhow, so I pressed the button, and I got filled immediately, right away. As soon as I pressed the button, I was in the trade. And then I was looking to see if we were going to get a further pop, and I realized, oh crap, I'm in these calls too expensive. I realized it immediately. And then I said, okay, well, it's going to have to be 295.58 maximum stop loss, because that is pretty much our pre-market level. And it was also the low of the previous day, I believe. These supports I have marked in on my charts are lows of previous days, and they're very relevant price points. So basically, this was the nearest support that I was going to identify for a scalp trade on the long side. And I said, okay, if we get under that, I'm out of these calls 100% and not playing around. So what happened was we crapped out of that resistance, slowly started selling off, got a massive sell-off. This one was a really aggressive push here. And actually, there was a big problem here because I wanted to sell the calls and I wanted to get short again on buying some puts. But the thing is, the IB system was lagging at that exact moment, I guess because they got overwhelmed with a bunch of orders at once, probably. And I only managed to get out too late. So really what I should have had was a conditional order in already, a conditional stop order saying SPY trading below 295.50, sell the calls right away. But I didn't have that in, and I had to push the button myself, which means that my order got to them probably a little bit late, and then they had an influx of way too many orders, and then that pretty much caused a mass panic, of course. Anyhow, I managed to get short again here. I bought some more puts on that break. Probably a little expensive. I watched a retest of this 295.50 and we continued to sell, and I got out of these puts right here. I was selling the puts there for profit, selling the puts there again for a profit. So at this point, I'm back to all cash. And these calls kind of ripped through a bit of my profits from the earlier scalp, but I managed to kind of make a bit of it back on this one. So just a refresh, 295.58 was the low of yesterday. 294.53 was the low of the consolidation of 2 days ago. That was a key support for me on the S&Ps, all right? So we broke below that, and that was still bearish at that point. So I decided to take another bearish scalp at that point, and I immediately was selling these contracts for profits. Boom, boom, and then I was out of that, and then I wasn't interested in it anymore. And you can see that once we hit that low, we slowly grind it up. And I'll show you the low on the Nasdaq. So look at where we bottomed, okay? That was the support I had written down. It was 228.48. This 228.48 was the low of this trading day where we were consolidating, and that's kind of where we established a base of support. Originally it was resistance, and then we established a base of support there, okay? So these levels are key levels that I've identified on the longer term charts, and key levels that were in play other days, okay? And you can see how we bottomed. We attempted to push lower a couple of times, but the buyers were stepping at around that 228.50 area, and that would have been a good area to short the puts and get long, basically. And I was thinking about it, and I didn't take the trade, although the edge was there, okay? There were buyers that came in to defend that price at that area, and the puts were very overpriced. So what you could have done at that point was, depending on how much risk you're willing to take, you sell the puts, you sell either the 228s or the 227s, and you can keep a stop pretty close by under 228, or if you want to risk a little more, under 227. All right, so you're risking about a point, but the thing is, there's a high chance that those puts are going to decay a lot. So that's why there's a high probability of making money on a trade like that, okay? There's a lot of edge in options, especially when they're overpriced. All right, guys, so that's going to be it for today. Right now, the healthcare sector is regaining the lows of the day. XLF is regaining $22. So right now, there's not a lot of edge in the markets. I don't like to trade at around lunchtime, so we'll see what happens in the afternoon if we get a continuation of the bear trend, or if this was just another bear just to get retail traders in the bearish mindset, and then tomorrow we go to new all-time highs, because that's been the theme lately. All right, guys, I wish you a great one. Hope you enjoyed the video. Take care. Bye.